Hi, welcome to Curious Bricks. Today we're going to talk about NEXTera Energy, ticker symbol NEE, 2020 Q3 earnings report. NEE is part of S&P 500 index under the utilities sector. The company earnings call was hosted on October 21st, 2020. Since this is our first time covering NEE, we'll start with a quick overview of what NEE does and how they make money. NEE is the holding company of the former Florida Power and Light Company with annual revenue around $18 billion. It participates in two primary markets, the regulated utility market in Florida and the non-regulated electricity wholesale market. The company acquired Gulf Power in 2018, which is a smaller competitor that covers West Florida. Florida Power and Light and Gulf Power use conventional fuels to generate energy and sell to residential, commercial, industrial customers, while NEXTera Energy Resources, or known as NEE, is a newly formed business entity that focuses on renewable energy market. It is the world's largest wind and solar energy generator. Before we dive into the financial details, let's take a quick look at some key statistics. As of November 13, 2020, NEE share price is $77.19 after its recent 4-to-1 stock split. Its market cap stands at $151 billion. The trailing PE is 39 and the forward dividend is expected to be $1.40 per share or a 1.83% yield. Now let's take a look at their latest quarterly financials. We'll start with the income statement. In Q3 2020, NEE reported total revenue of $4.8 billion, which is 14% lower than the same quarter last year. Revenue decline was driven by lower revenue reported by its energy resources group. In this quarter, COVID had minimal impact to its operations. FP&L reported 2.8% customer growth and favorable underlying usage. Gulf Power, however, reported unfavorable underlying usage due to the power outage caused by Hurricane Sally. NEXTera Energy Resources reported an increase of 4,800 megawatt to its renewable backlog. Looking at the balance sheet of this quarter, NEE reported total cash and cash equivalent of roughly $2 billion, which is slightly higher than same quarter last year. Long-term debt increased by $6 billion to a total of $42 billion as the company continues its capex projects. Management provided outlook of its adjusted EPS for the rest of 2020, as well as the future years. 2022 and 2023 adjusted EPS is expected to grow 6 to 8%. 2019 to 2022 capex is projected to increase to $60 billion from the $50 to $55 billion range provided earlier this year. Dividend is expected to grow 10% annually through 2022. NEE is planning to do more debt refinancing in Q4 to take advantage of the lower interest rate market. Renewable energy remains the key growth lever for the business, and the recent acquisition of Grid Lines will supplement its renewable business. During the Q&A session, analysts mainly focus on three areas: the competitive landscape in the renewable market, potential tax reform if Biden wins the election, and the future perspective of its battery storage business. Based on the improved order backlog, the company felt confident on the future of its renewable business. Regarding the tax reform, the company sees low probability of immediate risk, as new government might prioritize other agendas than tax reform. Lastly, the management sees its battery storage business have great potential as both a supplemental service to the renewable business and a standalone opportunity. Now let's take a look at NEE's stock performance before and after the earnings call. As you can see, the market did not have much reaction after the earnings release. Lastly, here's the latest summary of the analyst rating of the company. There are 15 analysts currently covering NEE, and the most ratings are under either buy or strong buy. If you are interested in knowing more about the company, I recommend you do an in-depth study of the company's SEC filings. Thank you for watching this video. If you like this video, please subscribe to our channel.